The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this January the 13th. And it's my pleasure to be here. And let's go straight to the numbers. Dow's down 37, was much higher earlier on at 16,476. We went long yesterday at 16,450. Again, going to be real tight here. And the S&P is down 4 at 1934. Comp index is down 27 at 48.59. The VIX index is now at 22.38. It's just down a little bit. It's not up, but it's down. It was down quite a bit more before. You've got something that's very interesting here. The GLD is unchanged. And as I look at it, I'm looking at gold. Gold is up 5. Let me just go to the gold chart now. I just want to show you an interesting relationship. Gold has made a peak C in the daily chart. The GLD, hey, what did I, yes, that's right. It also has made a peak C because that was the low bar. So this is very interesting. And the relationship that I was looking at is A, B, C. On the way up, the dollar DXY has gone to that peak B, and it's really struggling to break above that trend line. And that, to me, is going to be a major issue, because if the dollar suddenly screams above this high of 98.83, it's at a, can't be 98, it's 99.63. 99.63 is at 98.93 right now. That essentially says the dollar daily has gone to a leg C. The weekly is really going to be improving, making that cup formation that I've already drawn in. It's made higher lows and higher highs, but it hasn't taken out the previous high of 100.51. That was a recovery high. And in this chart that I'm looking at here of the 120-minute chart on the dollar index, just want to see if that was in fact a peak, because 99.29, 99.29, 99.29, 99.33. So this, oh, I love it. 1 penny makes a difference. This is F. I'm calling it F for now. I should technically call it an alternative F/B. But on a daily base, on a 120-minute chart, the stochastic, which was outstanding, and right in the 88 area, is now at 82 and turning down. The MACD, that's a stochastic. The MACD is just crossed negative. And I'm thinking here that there's a chance that the dollar actually lands up pulling back. And if it does that, we want to see what the relationship is here to the gold. I've not really been interested in gold. Some gold stocks are starting to be attractive to me. But I want to jump now. My contention has been that at some point the dollar will give us a more concerted move to the downside. And it's at that point that you will get, if I can find it here, dollar TRCCI. And that is this dollar index. I'm sorry, this is the commodity, the Reuters Equal Weighted Commodity Index. And it looks like all the commodities. And look at this. I haven't updated it yet. So this is a brand new trough A. On the way down, we call them troughs, those inverted Vs. A B and a C, which is an alternate G/C. Why is that? Because this continues. So this is a trough D, and then it's E/A, F/B, and now we've got a G/C. But the MACD is deflected low in the weekly, and the stochastic's making that W formation, which is reversing to the downside. So my thinking was that even though the dollar did look good for a couple of days, that there'd be some kind of a pullback, and that we might see this was the assessment I made last night into this morning, that we might see a crude oil reversal to the upside. Well, it was looking like that was going to happen earlier today, but no. The numbers come out, and there's, I guess, there's now greater capacity. And what's happened is that crude oil, the USO, which is the United States Oil Fund, is down at 9.10, down 8 cents. And it has not taken out yesterday's low. That's going to be really important. 8.90 was the low yesterday. 8.93 was the low today, so slightly higher. But we've also made a lower high. So there's an inside bar. The day is young. If the market continues to pull back like this, and remember, in a bear phase, and it's very hard for me to try to do this. I'm trying to do it. I'm holding back, but not enough. You really need the patience. You need the patience to allow rallies to unfold without going long, unless you're just a short-term trader. And sometimes it's nice just to have a short-term trade. But in the larger context, you want to be putting on more and more shorts. And so far, the United States Oil Fund looks terrible. The Dow tried to rally today. Yesterday was not bad. If today was up in the 16,600s instead of being at 16,460, that would have said there's a possible V-shaped recovery and Dow could go to the 9-period moving average of 16,727. That isn't happening right now. So we've got to monitor this really closely. So what have I left out here? Of course, I've left out two important things. One is the TLT, which is now down three ticks at 123.73. It's in at, I'm calling this C. I should really call it F/C. For now, I don't see any reason why not. The stochastics at 77, but flattening out, and the MACD is still good, and the weekly chart is still good. So I am going to call this a leg C in the TLT. And if perchance the market remains weak and tomorrow opens weak, then you could see a leg D to the upside at 124.33. And we'll see. That's if there's no new recovery high today. So let me just put this into context, and then I can at the same time answer a couple of questions I wasn't able to get to yesterday. The New York Stock Exchange has gone below the left side low of 95.03 made on the 24th of August. It has not closed below, but it went to 94.35. That's 70 points lower. It's a terrible looking chart. Let me just get this 120-minute chart out the way here, because we want to look at this clearly. That means you started leg B to the downside in the monthly chart. And where is the next support? If there is a tumble at any point in January, the next support, this is a January candle, is 9,220s, somewhere around there. What is the resistance? It's the former trend line that was support, and now it's resistance up at the 98 area. 230 points to the upside. I'm not sure what can trigger that. It can happen, but I'm not sure what will do it. But in the meantime, back at the ranch, as I like to say, we're looking at a situation that says the New York Stock Exchange, the very broad 2,000 plus New York Stock Exchange, has come down from 11,254 back in May down to the 95 area in August. So that's over, it's about 2,000 points. Had a very strong run to the 10,600 level and then came to a lower low. So we'll have to talk about that when we get back. For the larger context, I'll be back. Basil Chapman, Tiger Technicians Hour. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So let me just do this quickly here. This is the USO with the Chapman Wave support resistance lines. 911 was the support right there. And we're at 911, but it went a little bit lower. This is the USO. And the 10-minute chart had 889 as support. And so far, the upside resistance is kind of open. And that's one of the reasons why I thought, gee, everyone, I mean, even in the Boston Globe today, just everywhere you look, it's just negative news about crude oil. And I thought, it's either today or tomorrow, but we should get some kind of the kind of bounce that says it's kind of an in-your-face bounce. It's like everybody's so bearish. Well, why not just have a rally? And that's the way it looks like. So the other reasons why I thought there was a chance that there could be a rally in crude oil is that it could be almost divorced in a sense from the dollar. It could just be in its own realm. It is so over sold that there should be a rally. Not only that, in my Chapman Wave methodology, I've got this is my interpretation, probably not others. Wave 5 in the Chapman Wave, but this is. I've now started something new, and it only has just a semblance. As always, I take a particular indicator and I turn it into my own, so it only has a semblance of Elliott wave in it. So I have to call it my own, and that said that we had reached a level in a trough F in the USO that said, hey, if ever you had an opportunity just to have a bounce at least to the 9-period exponential moving average, this should be it. We'll see. Okay, so now let's get on with our story. The question I said that was crude oil, basically. I think it's ready for a bounce, but really the weekly and monthly charts are just terrible. A lot has to happen. Either a V-shaped fantastic recovery with the USO going into the 12s by Wednesday, a week. But at this point, it's not a great chart, all right? The other thing I wanted to talk about is, I wanted to talk politics only for a moment. And it's not politics. Remember, it's the politics of politics. You're not going to get any recommendations here. All I'm going to do is say, I was reminded, someone reminded me that back in, I think it was the spring, I said that I'll be getting into the I always do this for every election. I look at the socioeconomic political trends and I say, based on that, what is the public most likely to do? And if you remember, I had said back, I think it was the spring, either the spring or really early, maybe June at the latest, that I believe that it would be Trump. And if I'm correct in my assessment of things, Warren, our Senator Elizabeth Warren, would be somehow involved. I have ideas about what I thought at the time would be happening. I don't know if that's going to be happening. So it has to be that she's either nominated as a potential vice president for something, but she has to be there because she's the anti-bank. So you've got the you basically got the socialists against the capitalists. And that's why it's going to be an incredible election phase. This is, once again, no recommendations. I'm saying just doing an assessment as if it was a chart pattern, and obviously we can get chart patterns wrong as well. This is kind of what I'm looking at. So let's move on. So the IWM, only reason why I brought it out is because what happened, there was such an overwhelming bunch of news over from the weekend right into Monday, right into even yesterday with, I'm getting emails, I'm sure others are getting emails, I'm sure wherever you look, you've got this thing about the greatest calamity about to happen in the stock market. To me, that is starting to make for one of the signs that says there are factors that you've got to look at that could produce a really strong rally. I don't think this is the time. I think we have to wait. I think we might even have to wait 6 or 8 weeks or more. But I'm saying that that's the chance. So as that bulls up, as the negativity bulls up, so we're going to see what happens in the stock market. We could, in fact, use a tremendous amount of time getting slightly lower lows, slightly lower highs for a while to use up that energy in a rotational aspect. I don't know yet if that's the case. All I know is that there are many, many charts that look very bearish. I'm looking at the IWM. It's broken that incredible run, this up channel run that went from June. No, I think that was also March. Yeah, March of 2009. Look at that red line. We have now seen the IWM, the Russell 2000 iShare, plunge below that. There's absolutely a figurative way of looking at this. Visually, it looks like an A to B equals C to D. That's the classic lightning bolt, which means we are in leg B, on lowercase b in the Chapman wave to the downside, and that makes the support that goes all the way back to October of 2014 at 103.54. We're at 103.24 right now. We just went to 101.94. So we've already broken that left side low bar. This is one of the reasons why there's no way I want to get overly bullish here is that these charts are very, very negative. Look at the MACD and stochastic. These are monthly charts. So got to put that into perspective. So here we go. IWM. I'm not sure what the question was. It was in an email. I don't know if I can stretch. Let me see if I can try to get that here. GT says, what does your chart say? Well, my chart says that in this cluster formation that we're making right now, in a trough E, there should be a bounce. It might just land up being an arch formation that goes into an M formation, unless there's a V-shaped pickup in strength right into Friday's close with the IWM instead of being down 55 cents, which is really poor right now. Let's see if it can get even above the high of yesterday of 104.99 in the next 2 days without taking out the low. And that's one of the things in a bear phase. You've seen it in the commodities. Rallies are meant to be shorted. It's hard to actually do, but that's what your thinking is. And we'll look at that. Now, sorry, Frank, yesterday you wanted to look at FAX, and I said I'd get to it, and I didn't. You see that it's trading at 4.46. This is the Aberdeen Asia Pacific Income Fund. So far, it hasn't responded very well to the market, but it has responded in an inverse. It still has somewhat of an inverse connection to the dollar. I remember I used to use it as a proxy for the mirror image of the dollar a long time ago. I'm talking about quite a few years ago. And now it's basically, whereas the dollar went from its left side to the right side to make a slightly higher high. The FAX, FAX, in the week of the 24th of August, went to 438, ran all the way to 482. Nice percentage move, 11%. And then it comes back and it breaks it and it's down. It goes to 435. Now it looks like it wants to retest that. So what I'd say to you is, yeah, as an income, if you are in it, and I remember you in it, I think a little lower down, I would give it a little room, because that's what you kind of have to do with some of these income, the stocks that bear income. And sometimes they participate with the market. In other words, the market goes up, it goes up, the market goes down, it goes down. And if it goes up and gives you a dividend, that's great. This is one that, in a sense, has been a little bit independent. It's been a little bit more closely related to the dollar. Let me talk a moment. Yeah, I think I'd like to do that. When I get back, I'm going to tell you what I'd be looking at now, because it's getting close. It mustn't break down from here. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So here we go. Dow's down 38, S&P's down 2. What I want to show is a couple of things. I was looking at the IWM. Let me just go back here and double check things. Yeah, so IWM, I would suggest that you have patience, and at 103.20, let's see if it's even able to rally to the 106s. At 106s, it should start to make an, even if it can get there, that is, should make an arch formation with a maximum of 108.20. Try to fill that little gap there, and then it should start to roll over. So I don't know if we're going to get it. If we don't even get a rally here, but we start to take out the lows of yesterday and the day before, wow, that is just really bad action. So we want to see a rally. The Dow's now at 60,485. Well, that's okay. It should be way higher than that. It should be in the. It should really be at 16,530 to 16,560s at this particular point. It's way off. Now, a couple of questions. So, and then the USO I just discussed. Let me just go back to that again. Yeah, trading in 908. And then I had a question about VLO. VLO is a Valero. It's an energy company. It was one of the only ones people were shocked when I mentioned once VLO is trading at near an all-time high. I used to have all these notated. I don't know why it's not notated now. Let me just quickly do this. So this is A. That's not a B. So that's A, B, C, D. Starts again. It goes A, B, C, D, E, F. Made a peak F in the monthly chart. Valero trading at 67.47, down 371. Hit a high of 73.88 in November. And I can just tell you this, that if it takes out 65, the 9-period moving average, but I'm really going to say, if it closes under 64s in the next week and a half, it doesn't really, in January. If it closes under that, Valero could very quickly come down and start to test the lows of the August. It doesn't have to be the lows. It could test the bar of August, which has a low of 51.68 and a high of 71.50. It could get right into that wick. And that would make me really concerned about stocks that had done well, that should be holding well and are not. And this would be one of them. Next question was, I want to look at, and a question about facts. Here we go. FAX, whoops, just as we were speaking, it dipped again. So here's what I'm going to suggest, and this is for Frank in the den. Frank, there's that pattern that I said it's trying to make that made me a little concerned that if it was to take out certain key support levels, then it's kind of open territory to go down even further to retest the low of the candle of the 18th of December at 435. So I'm just going to say now is the point where I'd be somewhat concerned. I don't think that the dividend that you can get is worth the risk on a percentage basis. All I'm talking about on a percentage is this thing could go down to 440. And then it could rally back to 451, and then it could move again and go down to 4 and hold the 435 low, that round number, that 435 low of the 14th of December, and just trade between there. I don't know if I want a stock that's giving me 4, 5, whatever percent dividend it is, that's moving around 10%. To me, that, or even if it's 7%. So because there's a low price stock, I'm just going to say, I think I had mentioned to you that I'd get out of a little bit of your position if it took out, and I can't remember if I said 445 or I think I said the low that it was at was 456. So between 455, 456, it's at 445 right now. I'd just be a little bit careful. I don't see any reason why you don't take off a little bit. And then I'd say to you, I wouldn't let it go below. I can't remember the exact figure, but I'm pretty sure it would have been around about 443, 442. So I hope that helps you because, that was the other thing. Someone mentioned that it's a low volume, it's not a low volume stock. It's okay. So just be careful, that's all. And if you're looking at the safety of a dividend stock, it is really tough. We have one which is right at the price that we bought it at, and it survived the decline the other day. The other one didn't, although the other one gave us a dividend. Now I can't even remember which one gave the dividend, but in the meantime, the other one gave the dividend. So this is a tough period even for looking at dividend stocks. All right. And yes, GE to move life sciences. Oh, is that? I thought they was just they were looking at moving their life sciences headquarters to Boston. That was in the Globe. I don't know if you're saying that they are, but they are looking to do it. And I think with all the noise and the fact that what's his name is living in the Boston area. I shouldn't say what's his name. He was the CEO of GE for all those years. They got a good chance to do that. That'll be good for Boston, I think, because it is jobs. All right, let's get back to our story. So facts, please be a little careful here. I don't think it's worth giving up that dividend as a stop. It just doesn't make sense. I'd probably lighten up, and I'm going to say to you, I'd probably lighten up a little bit more. Why? Because if the dollar, and it's still, I'm surprised, it still has a relationship. Look, the dollar's got the cup formation that has the arch formation. So that's why I'm saying you can keep a stop in a little lower down, because there's a chance that if the dollar does pull back and doesn't break out above 99, what did I say that was, 99.83, it could stay in this little trading range. All right, got that out of the way. Then tree, one that we looked at a long time ago. I did some work on it when we did it during the show, because it's one that I wasn't sure what it was, and then I realized I'd read about lending tree, and then I didn't realize that the symbol tree was for lending tree, and I didn't, and I said, oops, we're going to a leg D, and then it was a peak D in the weekly chart. Well, that was a peak E in the monthly chart, and this is a very sharp A to B equals C to D on the downside, which is already done. And today it's down 22, I didn't even realize that, down 22%. Down 19 points at 67.47. That's what I'm saying. This is a difficult market. And my recommendation is actually to be much lighter. And, I mentioned 2 or 3 times over the past 8 or 9 months that in your portfolio, if you have one that you've been investing in as part of funds, mutual funds, whatever it is that you do every month, that you should lighten up a little bit, and that money, that cash will be put to use at some point. I still think that that's the way to go. Have cash ready. We are going to get a lovely buying opportunity, a real buying opportunity sometime in this quarter. I don't know when it is. And that's what I would wait for. So that's what I want you to do. Quick look to see about other questions. There was one. Whoa, JP Morgan. JP Morgan. Now, JP Morgan is a very interesting stock because it failed to make a new recovery high, whereas some did, above the 70.61 high of the week of the 24th of July. JP Morgan. And then it goes all the way from the peak F top at 70.61, and I can't say plummets. It really crashes. It crashes down to 50. I mean, that's a 30% decline. Well, what happens is, when you get a wick like this, if you start to traverse, if you start to go into halfway into this wick, and you remain there for part of your weekly chart, you remain there for 3 or 4 days, you have to really be careful, because there could be a real quick slide down to the next level of support. In this case, it would be you're at 58.90. 55.95 is the 200-period exponential moving average. So I'm a little concerned that I've got a peak E in the monthly chart of JP Morgan, Chase and Company, banking financials, and I'm looking at this to say, wow, you're a bit of a clue as to what's coming up, and it doesn't look all that good. Hey, I'll be back. Dow's down 25, S&P's down 1.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I answer a question here. Yeah, in my daily report, I start out every day with, let me just see if I actually find it here. With this chart, is this the chart right here? Yep, that's the chart. Is that the one that I sent today? Yep, that's the one. I started with the daily chart of the Dow. I showed the resemblance. This is what we were looking at, that sharp move down in August. We had the sharp move here, trying to rally. I said, we've got to get through this level. It's really important. This, what I call a Chapman wave up track. I've changed the name now from an inside track to an up track and a down track. Just makes it easier. So this is the up track. And the dashed line, you close below it, that's very negative. The stochastic is very flat. It's way down in the single digits, and the MACD is not good. So anything here has to be at first called a balance, and I give a synopsis of what I'm looking at with the VIX, and the VIX needs to slide. Otherwise, you're not going to get a sustained rally, etc. Then I move on, and next thing I send usually is the overview. And what I discussed in the overview is you see this arch formation in the 120-minute chart Dow, the Dow 120-minute chart, I should say, and the VIX 120-minute chart. It went to a peak D at 27.39. So this is where I'm expecting at least a bounce. So we kind of had that bounce. Now we're fading. And Dow is down 53, S&P's down 5. This is a really important focal point, because that arch and that cup produces what I call an oval formation. Let me go to the real thing, and I'll show you what I'm talking about. This oval formation has a way, because they're inverted, it has a way of signaling very often as they come together. Look what happened. Peak F in the VIX index at 2648, back around about the 11th, what was that? The 14th of December. And that's the low, and you got a rally that came up in the Dow. Then it made an arch formation. This made the cup formation. Look at the arch formation. Look at the cup formation. Look at the arch formation. Look at the cup formation. So the synchronicity of that mirror image is really, really important. And if this fails and we start a new leg down, that's going to be like that over there. It's going to be an extension. So we've got to be very careful as to the closing price today of the Dow, because if the Dow continues down, and my 10-minute chart says that there's a chance. Look at this. Where did it go? Oh, there it is. There's a ES. Is this the one that I was looking at? ESH16. What happened? No, this is not the one. Isn't that interesting? So, oh, that's the one. Okay. There's a chance that we're going to come down right here. There's a peak A, it would become an A minus, and retest the low that was made right there at 1922, and that would be right there. You don't have to worry about these numbers right now. There's nothing I'm going to be explaining because this is an ongoing work. I like to test things for 6 months or more before I even really discuss them very much. So this is going to be an interesting moment. Does this go from here, the base has just been formed in a left side, right side price time match, or does it take out that low and it takes it out before 10 minutes to 1 o'clock and it goes underneath 1923 that was made just a moment ago. So we'll be watching that, and this is going to be very interesting because let me go back to that. Let me show you something that I thought was very telling and very unusual. You see these patterns, these cups and arches. Remember, the market's made up of only 3 directions: straight up, straight down. 3 patterns: straight up, straight down, or an arch or a cup. And the arch could be, in fact, a V, inverted V, and the cup could be an inverted V, but the principle is the same. Now what I'm looking at is, look how many times we went to 1892 at 2 o'clock on the 11th of January. Spiraled up, made an arch formation, came back down to 1903. Had a spectacular move up to, I didn't put that in, 1940.25. Let me just type that in, 1940.25. Okay, red. And then it comes all the way back down to 1905.75. It's making a beautiful series of what? Lower highs and higher lows and higher highs. I was typing at the same time. So that makes this area right now that we could be headed to, who knows, this trend line right here, very important. That trend line says 1918-ish area is going to be must hold. And then what happens, it makes a cup formation from the 1903 level, goes to 1940.25, pulls back to 1905.75, just 2 3/4 points higher. But what does it do? It has a spectacular move that goes to 1946.50. That's not 10, that's 19. Right there, 9. Okay. And then it pulls back, and we don't know where it's pulling back to. But it is making a stair-step move. But this is not the kind, remember yesterday what I was saying, I don't think we're going to have a V-shaped recovery in this particular bounce. It's going to be more like a stair-step move. But in fact, it's even worse than a stair-step move because it's giving back gains in most of the indices that have rallied. Even the IBB now is down 5 points at 290 something. This is really very, very poor action. Even as we're talking, we have just gone to leg D. There it is. And you remember that? I wrote this in, that 5. So there it is. This is a D. And there we are, another arch formation. This is going to be really important. How does it hold this area right now? So I wanted to get that out the way just on a purely technical basis. Now, here's another thing that I want to look at. GE is at 28.66. It made a low the other day of 28.25. Not the other day, just 3 days ago. 28 point, what did I say? It was 25. So now we're looking at 28.67 up 3 cents. And that ain't good. That is just not good action. And why is it not good action? Because it should have held this gain. The move that it just had it's very nice looking, and it'll be very much more, much nicer looking. And give me 1 second. I just want to answer this very. Hi, I'm on the air. You can call me in a few minutes. There you are. How's that? So now what we're looking at is GE, which should be, I call it my bellwether Dow stock, and it's got a flat stochastic. That's not showing any signs of energy. If in fact it was up at the high today of 29.06, it was even better than that at 29.20. You would have seen this stochastic at not at 8.85. It would have probably been at about 11, in the teens. I want it in the teens. So this says to me, watch out. This is such a dangerous period that we're in. That's number one. Number two is my bellwether stock has possibly made a peak E in the weekly chart. Instead of spiking right out of this range of this arch formation, all of a sudden what it's done is it said, hey, I can't take the strain. I'm giving you a signal that says pretty much like a sell signal in the weekly chart, but I have to wait for all of this week to see if we close substantially below 2961. That's the 9-period exponential moving average. The MACD has turned down. The stochastic has gone on 80%. There's a chance that I'm going to get myself a weekly sell signal, maybe even a sell mode if it goes down much lower than this. So I have to be really careful. What is that crazy single leg A up in the monthly chart that went from 1937 all the way to 31.49? What an incredible rally this is. We haven't even given back a third yet. So 28.05 is the 9-period moving average support. I'll be back. We'll talk a little bit more about this. And don't forget, great programming today, Wednesday. The swim lesson comes up off.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we're back. Dow's down 85. S&P's down almost 9. Don't like that at all. So, good question. Okay. Sorry, Bob. I remember now that, I did do the New York Stock Exchange. You have another question. Indu. As the TNX hit 2.1%, some buyers start to buy Apple to get dividend yield. This is what CNBC was saying this week. Should we look to get long Indu if TNX is near 2.1%, and therefore not be shorting stocks at these levels? So, Bob, all I can say to you is that, let me just quickly check. I did the transportation earlier, so that was another question. All I can say to you is that I'll go to Apple right now, do two things at once. One is Apple might be considered somewhat of a dividend stock. But if I'm looking at a dividend stock, I do not want to see a break of say 7%. So that's like 2 or 3 or 4% away from the dividend. I don't want to see my capital depreciate by that amount of money. And I see that as a very strong possibility with Apple. I think Apple's going at 100. I think that round number 92, it's already into the Roman candle. I just don't see the magnet of 92 now is so strong in my work that I'd be really surprised if in January, maybe February at the latest, but I'd say January, 92 is not at least touched. So I would not, Bob, I would not treat this as a dividend. That's number one. Number two is talking to the issue of the TNX.X. It's declining. It's at 21.01. The pattern that I'm looking at in the monthly chart says that the MACD is flat, which says you should have some support in the downside and limited upside. So I see trading range, but that's the MACD. The stochastic is at 60%. And if it starts to pull back to the 58, 57%, then my Japanization of our bond yields theory continues in place. And you will see that the 10-year Treasury note interest rate, oh, I don't know if I got time. Is this the last segment? Yes, it is. You know what? It's worth it. I'm going to just do that real quickly. I want to show you something very interesting. Apple reports third week of January. You know, by then, maybe they can have a pop-up. I don't think it's going to be good news. Well, of course, it's reporting the December sales. So maybe the December sales, you can say, okay, let me just get out of this, close workspace. I'll hop over to the other one, and I want to show you something very interesting. Look at this. Long-term charts. I'm going to go to my triple yield chart. So I was talking about my... the triple yield chart. Remember I spoke about it? I mentioned this is purely technical analysis. You see this trend line from 39.74, 3.974% in the 30-year, 30.36 in the 10-year. Look at the trend line, how it hit that level back in June of 32.55, and it kept on going. And now you basically have, don't like to overdraw in this particular chart. I like to keep them as clean as possible. You have the potential here for an arch formation. And because you didn't break that gray horizontal line, it tells me that my triple yield chart, 30-year yield, 10-year yield, and my peak C that should be in the 5-year are now, they got so close together, but they're starting to pull back. And that tells me that the contention that I've had, that yields could continue lower and that the bonds could continue high is, I think, correct. We've got a peak C minus in wood, which is the iShares of the Global Timber and Forestry ETF, gone to a new low. And look at the housing market, the HGX, with the yields so low. Look what's happened here. Nothing. It's going down. This is the Philadelphia Housing Sector Index. This is still a dangerous market. So let me just make it as simple as possible. Let me go to this chart right here. No, not that chart. Oh, I lost it. Daily. All right, let's just make it real simple. Dow's down 100, S&P's down 11. If the volatility index continues to rally, there's going to be a real problem in that you are not going to get a decent bounce. And all we're going to do is make H formations as we try to form some kind of a base here. Be careful out there. Stay tuned for the Think or Swim Options Hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.